The product mix of Gamma Limited is as under: products M and N, units 54,000 and 18,000 for M and N, selling price 7.5 and 15, variable cost 6 and 4.5. So we have given the unit, selling price and variable cost. Now what is the question? Find the break-even point in units if the company discontinues product M and replace it with product O. So the company discontinued product M and replaces it with the product O. The product quantity of the product O is 9,000 units and its selling price and variable cost are 18 and 9. Fixed cost is 15,000. So we have to find the break-even points in units, and the question is provided a product mix. So what is the formula for find break-even point? Break-even point, since it is a product mix, we have to find the combined break-even point. Combined break-even point is equal to fixed cost by weighted average contribution per unit. So since it is a product mix, the combined break-even point in units is equal to fixed cost by weighted average contribution per unit. There is nothing. We usually find break-even point in units as fixed cost by contribution per unit. Since it is a product mix, we need to find the combined and fixed cost by instead of contribution per unit, it will become weighted average contribution per unit. So we have to find the weighted average contribution per unit between what products. We are replacing which product. We have product M and N and we are replacing the product M with O. So we are producing what products? N and O are the products that we are producing. So let's find the contribution for them. N and O. The number of units of N and O is given in the question. Number of units of N 8,000 and O it is 9,000. So what is the ratio? 18,000 and 9,000. 2:1 is the ratio, right? Now selling price and variable cost is also given in the question. Selling price and variable cost is also given. So for N, sales minus variable cost, 15 minus 4.5 gives what? Contribution per unit. So 15 minus 4.5 gives contribution per unit as 10.5. And for O, what is the contribution? For O, the selling price and variable cost is given. Selling price 18 and variable cost 9. Up 18 minus 9 gives what? 9 as the contribution. We get 9 as the contribution. Now we have to find the weighted average contribution to substitute in the formula, right? So weighted average contribution is equal to contribution of N, 10.5 into weight of N. What is the weight of N? 2 divided by total 3. 10.5 into 2.3 plus 9 into weight contribution per unit of O into weight of O. What is the weight of O? 1 by 3. So weighted average contribution is equal to weight of N into contribution of N into weight of N plus contribution of O into weight of O. So we get the weighted average contribution as 10. Now we can find the combined break-even point in units. Combined break-even point in units is fixed cost by weighted average contribution per unit. Fixed cost is given in the question. Fixed cost is given as 15,000. So 15,000 divided by weighted average contribution per unit 10. So we will get the combined break-even point as 1,500. Now we have to find the break-even units of N and O separately. Break-even units of N is this 1,500. There is both. It is for mix of N and O. So what is the break-even point of N? 1,500 into weight of N. The weight of N is 2 by 3. 1,500 into 2 by 3 gives 1,000 and the break-even point of O gives 1,500 into 1 by 3, that is 500. 1,500 into weight of O. Weight of O is 1 by 3. So this is our answer. Hope it is clear.